Global oil markets breathe a sigh of relief as U.S.-China tensions ease, for now. The world of oil took a roller coaster ride recently, but there's a glimmer of hope on the horizon. After plummeting to 5-month lows, oil prices rebounded on Monday, fueled by cautious optimism that talks between the U.S. and China might diffuse escalating trade tensions. But here's where it gets controversial. Is this rebound a sign of genuine progress? Or just a temporary blip before the storm? Let's dive in. The spark, Trump's tariff threat and China's countermove. Last week, tensions flared when China tightened its grip on rare earth exports, prompting U.S. President Donald Trump to threaten a staggering 100% tariff on Chinese goods bound for the U.S. by November 1st. This move, coupled with new export controls on critical software, sent shockwaves through global markets. However, a potential meeting between Trump and Chinese President Xi Jinping at the Asia-Pacific Economic Cooperation Forum in South Korea has investors cautiously hopeful. Could this be the turning point? The rebound, a tactical retreat, or genuine progress? Brent crude futures climbed 1.47% to $63.65 a barrel, while U.S. West Texas Intermediate, WTI, crude rose 1.51% to $59.79. Independent analyst Tina Tang attributed the rebound to profit-taking, suggesting traders are betting on the so-called taco trade, a playful acronym for the belief that Trump always chickens out. Tang argues that Trump's tariffs may be more of a negotiation tactic than a long-term strategy. And this is the part most people miss. While the rebound is encouraging, Tang warns that volatility is here to stay, and a full recovery in oil prices isn't expected anytime soon. China's role, a steady hand in turbulent times. Amid the chaos, China's crude imports in September rose 3.9% year-on-year to 11.5 million barrels per day. This increase reflects higher refinery utilization rates and ongoing stockpiling efforts, showcasing China's resilience in the face of global uncertainty. But with trade tensions still simmering, how long can this stability last? The wild card, Trump's Gaza declaration. In a surprising turn of events, Trump declared the Gaza war over as he headed to Israel to oversee the release of Israeli hostages and Palestinian prisoners under a fragile ceasefire. While this development is unrelated to oil markets, it underscores the unpredictability of global geopolitics, a factor that always keeps markets on edge. What's next? A delicate balance of hope and risk. Goldman Sachs analysts predict that both sides will likely pull back from their most aggressive policies, potentially extending the tariff escalation pause reached in May. However, the risk of further escalation remains, with higher tariffs or stricter export restrictions still on the table. Here's a thought-provoking question for you. Can the U.S. and China truly find common ground? Or are we just delaying the inevitable clash of economic titans? Final thoughts. Navigating uncertain waters. As oil prices stabilize, for now, the global economy holds its breath. Will diplomacy prevail? Or will trade tensions reignite? One thing is clear. The world is watching, and the stakes couldn't be higher. What's your take? Do you think this rebound is sustainable? Or are we just buying time before the next crisis? Share your thoughts in the comments below.